Hey, it's Joe Crump. Got another question here. This one is from Kim from Los Angeles. Kim says, there's two scenarios I've come across in talking to sellers. Number one, what happens if someone is behind in their mortgage payments? Is there a way to help them by selling the home rent to buy with a tenant? And she's talking about using the for rent method, where we use the lease option memo and we tie up the property to buy it with a rent to buy that's assignable, that we then assign to a new buyer, and we take the lease option fee. The first month rent goes to the seller, and we're in and out of the deal. We make a chunk of money and we're done. And that's what she's talking about here. But she's talking about somebody who's behind on their payments. And if they're behind on their payments, you don't want to sell, you don't want to do this with a buyer if that person is behind on the payments. So they either need to get current on the payments. There's a possibility that you could come up with their late payments out of your lease option fee, but that'll dramatically reduce the amount of money that you can get to do that deal. And I don't usually take deals like that, but you can look at that and decide for yourself. And then you can also have the seller talk to their mortgage company and see if they can get a loan modification, which is becoming more and more difficult these days for them to do it. But it might be possible for them to bring it current and then make the payments over time. That way you'll protect your buyer in the transaction, and the seller will be back on track and get their credit straightened out over time. So it's a real benefit if they can pull that off. But if they can't, I wouldn't spend a lot of time with a deal like that unless you can get it substantially under market value. Remember, there's only two ways that you make money in real estate as an investor. One is you buy properties substantially under market value for cash, or two, you buy properties that are closer to market value on terms, and even above market value in some cases. So if you can sell it, if you can buy it on terms, it means you can sell it on terms. If you buy it for cash, you can even do an assignment for cash if you can get it low enough in price. But remember, the person you sell it to has to come up with cash, and that makes it more difficult for them. So that means you have fewer people that'll buy that property. So you want to focus on properties that you can sell on terms most of the time, because it'll make it easier for you to sell. We know that if we take a property on a lease option and it's properly priced, not just the purchase price, but the actual monthly payment, which is much more important than the purchase price. The purchase price can be high, but the monthly payment has to be in line with market rent for that property. If you're over that, it's not going to sell. But if you're in line with that, and you use the techniques that I teach to sell, using Craigslist and using the signs in the yard, those types of things to get it sold, that property will sell in 30 days or less, usually just a couple of weeks. If the monthly payment is high, it will not sell at all, and you'll have to get your seller to bring their price down, their monthly payment down, because they'll be competing with other properties. All right, hope that helps. Oh, I've got question number two. Let me finish that. Question two was, if someone is upside down with your property value by $150,000, let's say the seller wants $500,000, but the current market value is $350,000. In one of your CDs, you say that you can give the seller the sale price of the property they want of $150,000 more than market value today if they agree to a longer term on the lease option, like 5 years. My question is, how do you know how much above market you can go with the sale price, and how much longer do you need to extend the term by? Is this something that one becomes more comfortable structuring the longer you're doing deals? Right now it seems so arbitrary. Or does the market naturally dictate what you can and cannot do with regard to structuring the deal? Meaning, if it's priced too high, no tenant buyers will respond to my marketing of the property. So you can sell a property for more than it's worth, and we do it in California, we do it in Las Vegas, we've done it in lots of areas where the property values dropped much more than they did in, say, Midwestern states, where they dropped 30, 40, 50, 60, 70% in value. And we have exactly these scenarios where the property, they have a mortgage of $500,000 on the property, but the current value is only $350,000. Well, we have been able to sell them for $500,000 because the buyer, the lease option buyer, is looking for a way to own that property. They will only pay market rent. So if you got a $500,000 property, let's say it's got a $4,000, $4,200 a month mortgage on it, but market rent on that is $2,800. So you've got $1,400 a month negative cash flow if they only get $2,800 a month income on that property. But the seller having $1,400 a month negative is much better than them having a $4,200 a month negative. That's why this works, because it makes sense for people who want to keep their credit clean. Now, it may make sense for people to just let the property go back to the bank and take that hit on their credit. But there's an awful lot of people, like government workers, politicians, people that are in high corporate jobs. They need to keep their credit clean because their companies check it. Or if you've got clearance, some kind of security clearances, you have to keep your credit clean because you become a higher risk if you have bad credit. So there are a lot of people out there that have to keep their credit clean, that have properties like this, that have this kind of income, that that you can help and you can solve their problem, and you can take their $4,200 a month pain and drop it down to $1,400 a month pain, which is much better for them. It's like the heart surgeon. He comes to you and he says, you need to have heart surgery. I'm going to have to cut your chest open. I'm going to spread it with these reb spreaders. I'm going to go in there and I'm going to cut around, and you're going to be in lots of pain, and it's going to be horrible, and I'm going to charge you a huge amount of money to do all this. But the good news is you get to live. Bad news, if you don't do it, is you die. So which choice do you make? And that's the same situation that these folks are in. It's not a good situation, but it's a situation that makes sense to an awful lot of people. So don't let these prices intimidate you. And when lease option buyers buy, the likelihood is that they are not going to exercise the option. They want ownership without the responsibility of ownership. Less than 30% of lease option buyers will actually exercise the option. And we tell this to our sellers. We want them to know up front the likelihood that they're not going to exercise the option. While they're there, while that buyer is there, they're going to treat it like their own house. You don't wash your rental car, but if you perceive it as your own, you're going to take care of it on a much higher level. People want to have the American dream. And whether you buy it with a lease option or you buy it with a mortgage, it's still your house. If you're a tenant, you're a tenant. You're renting from somebody else. But as a lease option buyer, you are a buyer in that transaction, and that's what people want. They want to be able to tell other people, come back to my house. They want to have control of that house. They want to be able to paint the walls if they want to. They want to be able to take care of it the way they take care of it. And that's what we provide. We provide the American dream for people who can't qualify for mortgages, which is a big portion of the country right now. And it has been working for us for many years. So there's always people that have this situation, and there's no reason that you can't make this work for yourself. All right. Good luck, Kim.